Hope everyone's doing well and had a good day. This is the Emini review for Thursday, June 6th, 2024. And tomorrow's Friday, so the weekly chart is important. And you can see we still have a bull reversal bar closing near its high. But traders are wondering if we're going to close above the high of 2 weeks ago, which is this line. You can see the market's hovering near it or slightly above it today. We also had a bad high one signal bar last week, which we triggered and we're above, and that price will also be a magnet. But for now, the bulls are controlling the weekly chart bar. But if you just look at today's price action, clearly a trading range day and very sideways with lots of overlap. And so even though the weekly chart looks like a strong reversal bar, it can be a little deceiving when you drill down into the smaller time frame charts. For the daily chart, I forget if I mentioned this at the end of yesterday, but I thought coming into the day, even though it was a strong bull trend bar on the daily chart, I was expecting the bulls to be disappointed coming into today. So if a bull bought above the high of yesterday, I was expecting them to be disappointed. And the reason for that is because the market has been in a trading range. So lots of overlap, big down, big up, one pullback, two legs up, we're high in the range. The odds are this is just a buy vacuum test of resistance and that there are sellers above. And for the 5-minute chart today, we had a really strong rally yesterday, but again, the higher time frame context shows that the market's in a tight trading range on the daily chart and we're high in the range. So today we had a gap up coming into the day and then a bear bar on the open, but big tail below, so buying pressure. So what about buying above bar 1? Well, it's a weak buy signal bar because it closed with a bear body. So the odds are there are sellers above. What about this bull breakout? It's strong enough for a second leg, and that's true, so we may go a little higher. But we also may pull back first, and the end of yesterday had a lot of trading range price action. It's an expanding triangle. The odds are the market is converting into a trading range. Bull trend bar on bar 2, so anyone who sold above bar 1, that's their entry bar, and that's obviously disappointing. That's not what the pairs wanted. So disappointing enough that traders might just exit on the close of bar 2. They might set limit orders at the high of bar 1 and look to get out of their shorts and sell higher. What about buying above bar 2? You can, but you have to recognize the context. Leg 1, pullback, maybe leg 2, but bull breakout, pause. The gap up was a bull breakout, another pause, bull breakout. This might be 3 pushes up in an overall second or third leg up. We're far from the moving average, and if you're going to be paying far above the average price, you want to see far above average bullishness. Bull breakout bar 3, so breakout bar 2, and a good follow-through bar on bar 3. So far it looks good for the bulls. One of the problems I have, and you can see what happened on bar 3, bears who sold above bar 1. Well, bar 1 was a bad buy signal bar. So if a trader saw bar 1, they're not thinking to buy above bar 1, but then we got a bull breakout. Look what happened when bar 3 tested the high of bar 1. We tested it to the tick and then reversed up. So consecutive bull bars, both fairly big and closing on their highs. That's good for the bulls. Are we always in long? I think so. But the fact that we're on the open and 80% of days begin with trading range opens makes this a little suspicious. Plus, no matter how strong a breakout is on the open, there's a 50% chance it reverses. And then a little bit of a surprise on bar 4. Big bear bar completely reversing bar 3 and overlapping every bar so far. So this is looking more like a trading range. Big up, big down. Bulls who bought the close of bar 3 are clearly disappointed with bar 4, and they're looking for any bounce, any rally to exit with a smaller loss. And bears who didn't sell because it was a pair of consecutive strong bull bars, they're also looking for a bounce to sell. The odds were there were buyers below bar 3 and that the market would get a second leg up. This is tight enough that it could be one leg on a higher time frame, but again, it could be leg 1, pull back, leg 2. And if we're converting into a trading range, and this is an expanding triangle, we might be high in that range. Probably sellers above 4. And then look what happened on bar 5. The market pulled back about 50% of bar 4. So if a bull who bought up here scaled in lower, they probably looked, let me draw it here. If a bull bought the close of bar 3, and I don't know, maybe they bought the price, the high of bar 1 here during bar 4, look at their average price. It's right here, where bar 5 tested. And the bears, they were also looking to sell after the bar 4 surprise. And it might be a 50% pullback of the bar itself. That's about where the market tested before it reversed back down. So bear breakout 4 and follow through 5, but big tails. So on a smaller time frame, it's more clearly 2 legs down. It's an implied pullback on this time frame. We went down on 4, then up into the close of 4, and up on 5, and then down again. So these tails represent bull bars, or at least bull moves on smaller time frames. So this is already 2 legs down. In a big up, big down situation, we're probably in a trading range. The odds are there are buyers below bar 2, buyers below bar 1, buyers at the close of yesterday, another magnet. By the way, here's the high of yesterday, which is also a magnet. So bar 1 fell below it, reversed up, found support. We're testing it again to see if it really is support. And then another surprise bar on bar 6, a big bear trend bar, breaking far below yesterday's high, breaking below the close of yesterday, testing further bars to the left, further down here. 79 was a strong bear bar, but it was a bear trap. Bears got trapped on the bull breakout. We're coming back down to that price. The odds are there are disappointed bears here who will look to exit shorts. And so even though this is fairly strong momentum, it's big up, big down with disappointment. So more likely a trading range. So what do you do with bar 6? Is it always in short? I don't know. I'm thinking it's buy low, sell high because it's a trading range. So even if it is always in short, it might be always in short briefly, and when it becomes always in short, it's time to look to buy. Bull bar 7, it's an inside bar and a big tail above. But if you're a bear and you sold the close of 6, you're disappointed with 7. Disappointment is the hallmark of trading ranges. Bar 7 is a low 1 signal bar. It's a big bar, so big risk. And the fact that it's a bull bar reduces the number of traders selling below. If we do go below bar 7, I suspect there are buyers below. But it's an inside bar, so it reduces the probability. If we break out to the downside, we'll probably find buyers. And if we break out to the upside, we'll probably find sellers. And then bar 8, we broke out to the upside and then pulled back immediately. It's a doji, so trading range bar in a trading range, so very sideways. Now bar 8 is technically a low 1 short, but it's a trading range bar. So again, if we fall below bar 8, I suspect there are more buyers below. There's probably sellers above bar 8 as well, but they may not come in until higher, like maybe the bar 3 close. And then bar 9 broke out again to the upside and found sellers. On a smaller time frame, it's more clear. That's a wedge. 3 pushes up on the past 3 bars. 1, 2, 3. It's a minor pattern, so we might test down to maybe the 6 low or the 6 close, and then form a trading range there. And again, like I said, with the past 2 bars, it's a low 1 short, low in a trading range. You have the rising moving average, which is support, and a big bull trend to the left, so probably buyers below, and more trading range price action, more likely. And we finally triggered the low 1 on bar 10 and found buyers below. Bar 10's a bull reversal bar, but it's a small body. And look what's happening here. We're trying to break out to the upside and failing, trying again, fail, try again, fail. So breakouts are not succeeding. So buying above bar 10 is a low probability trade. Fairly small bar, so small risk. And small risk means low probability. It is a second reversal up in a trading range, so we reversed above bar 7, pulled back, and we're getting a second reversal. So some bears might look to exit above bar 10. If a bear was short on the close of 6 and sold more higher, they might have used bar 10 to exit at their average price. And then a bull surprise on bar 11. Big bull bar, closing on its high, and a strong reversal bar, but possibly 2 legs up and high in a trading range. Leg 1, pull back, leg 2. Second leg traps. The second leg often looks stronger than the first. In this case, the first leg was a wedge, and the second leg is a couple of strong reversal bars. But the context is bad for the bulls. There might be some more room to the upside, but I think the upside is limited because look what happened last time we were at this price. We sold off for 3 bars in a fairly big distance. Any bull who bought bar 3, scaled in lower, they're looking to exit because they're disappointed with the 3 bar sell-off. If a bull bought the close of 3 and scaled in maybe above bar 10, this middle line is their average price. So bulls might be exiting longs around here. So I think the upside is limited. And you can see what happened on 12. We didn't even trade above bar 11. The trader sold the close of 11. 12's an inside bar, and it's almost the size of bar 11. It's a very big bar, but a small, bare body. High 1 short, high in a trading range, and a bad signal bar, and plus a big bar, so big risk. So for a couple of reasons, I suspect there are more sellers above. Leg 1, pull back. Leg 2, pull back. If we do break out again to the upside, it'll be 3 legs up, high in a trading range. 13, an inside bear bar, so consecutive inside bars. It's breakout mode, which we already know because the market's in a trading range. Trading range is breakout mode. It's also a triangle, which is a type of trading range. The range is contracting and getting smaller, and the market's searching for a direction. The odds are we're not going to stay in this range all day. We will get a breakout and probably a measured move of the opening range. The question right now is which direction will it be in? The market's fairly neutral. Traders are always trying to figure out which side is stronger. Is there more buying pressure or is there more selling pressure? It's really neutral here. And because we had a bull trend yesterday, that might increase the probability of a bull breakout. But again, when you consider the higher time frame context, the fact that we're high in a trading range, that actually might make there be a higher probability of a bear breakout. And judging this price action today, big up, big down, big up, really hard to say who is stronger. The bulls have controlled almost every bar above the moving average. Only 1 bar has closed below the moving average, so that's good for the bulls. But a lot of the bull bars have tails above, and well, it's hard to say too, because bear bars have tails below, but also some of them close on their low. but also some bull bars close on their high. So it's very 50-50 here. What do you do here? I think it's becoming a tight trading range, a limit order market. So usually, in general, best to wait. But if you are going to trade, it's buy low, sell high, and scalp. So buy below bars and scalp, sell above bars and scalp. Everything that's bullish, consecutive bull bars, the institutions sell. Consecutive bear bars, it's bearish, they buy. Two big bull bars, they sell. So what do you think is going to happen on 13? Might go a little lower, but there's probably buyers below. And look what happened on 14. So we had a breakout attempt of the triangle. Depends on how you draw it. But we broke out below 13 and found buyers below. The high of yesterday is obviously an important price. We're touching it many times. We're going sideways at it. 14 is a bull bar, but closed below its midpoint. And this might be enough of a breakout. This might be a pullback, and the bears may get a second leg. But I still suspect it's a triangle, and there's probably buyers below. Most breakout attempts are going to fail. And then we went below 14 and found buyers. So now the bulls have a double bottom with maybe bar 12 and 15. 15 a reversal bar, but a small bar in the middle of the tight trading range. Never wise to initiate trades, especially with stop orders in the middle of a tight trading range. So again, probably best to wait. The market's probing up and down, looking for direction, looking for a fair price. And so we may probe a little higher again, but I suspect there are sellers not far above. 16 broke out to the upside. We went a little higher, but immediately pulled back. And there were sellers above. Very tight trading range, lots of overlapping bars and dojis. Really best to wait for a breakout and more clear direction, and then to trade in the direction of the always in. It's a breakout mode open situation, so like I said, the odds are we'll get a measured move up or down, but it's not clear which direction yet. Bear breakout 17. Went a fair distance below 16, so if a bull bought below 16, market went how many points? Three points, not as big as I thought. Relative to the range, we fell all the way to the bottom of the range. Bulls who bought here, disappointed. Now that we pulled back, they'll probably look to exit their longs. And then you look at bar 17. You got to ask, is that a strong stop order signal bar? Of course not. It's the middle of a tight trading range. It's a bear close. Lots of overlap, and the odds are there are sellers above. In 18, possible that the bulls who bought here scaled in lower. They exited their longs. We went a little higher, but we did not trade above 17, and we got another bear bar on bar 18. Inside bar, so lowers the probability. It's an inside bar, low in a trading range, but it's closing on its low, and that might reduce the number of traders buying below. But as far as being short, we have 1 pullback, 2 pullback, 3 legs down, and a possible double bottom, so not ideal to be short. We may get the downside breakout, but the bears need to do more and prove it. And then the bears failed to break out on 19. We went to a new low of the day, but found buyers, and the breakout failed. But as far as buying above 19 for a double bottom, lower low, double bottom, you're buying after 3 bars without a bull bar, and then there's a tail on bar 19. It's more of a trading range bar, and it's completely below the moving average, so not ideal. Probably there are more sellers above. The bears getting the breakout of the triangle. So what the bears want is for this to be a breakout of the triangle, maybe a breakout pullback, and then a second leg down. And what they really want is a measured move of the triangle. And that might just be bars 4 through 6. A measured move down to here, near the bottom of this buy climax. And again, for the upside, because it is 3 pushes down in a trading range, some bulls will buy above 19, taking a chance. It's a wedge, double bottom, and then we get the measured move to the upside, and this becomes an early low of the day. Remember, by bar 18, the odds are we have found the high or the low of the day. The bulls do have a legitimate argument. It's 2 legs down, leg 1, pull back, leg 2, the second leg subdivided into 2 or 3 legs. So it's not the most unreasonable trade to buy above 19, but it's just not ideal because you're buying on a stop order below the moving average and your signal bar is not all that strong. And when you consider the daily chart context, again, the odds are today will disappoint bulls who bought above yesterday's high. Another bull bar 20, so breakout, but did not go very far for the stop order bulls. Now it's a bad low one short, so probably buyers below bar 20. The bears are still hoping it's a breakout pullback. The bears are shorting, looking for continuation down. The bulls are hoping it's a failed breakout of the triangle. 50% of breakouts of triangles are in the wrong direction, so failed breakout, and then we reverse and come all the way up here. Also, if you just judge the past 2 bars, you have big tails and small bodies on both bars. There's a tick gap from the close of 19 to the open of 20. But just look at the bull breakout. Bars 2 and 3 are a better example of price action with a strong breakout. Consecutive bars, little overlap, closing on their highs, big bodies, small tails. And then you compare that to 19 and 20. And you add in the context, the middle of a tight trading range. It's just not ideal. Bear bar 21, low 1 short, breakout pullback, sell setup below 21, and the odds are there are sellers above 21. '22, we traded above 21 and found sellers above. We're around the middle of the triangle, the apex of the triangle, and the bulls are having a hard time getting back really to the middle of the triangle. For the bulls here, it might simply be leg 1, pullback, and then a minor second leg, which is just 1 bar. But if you're a bull and you bought above 19, the market's been sideways for 3 bars. That's disappointing. That's not what you were looking for. So that's disappointing. And then for the bears, still on the breakout pullback sell setup. So selling below 21 or 22 is a breakout pullback sell setup, betting on more to the downside. It's also subtle, but the bears are controlling more and more bodies below the moving average. So bar 18, almost completely below in terms of the body. 19 was completely below. And then more of these bars, more than 50% of these 3 bars, are below the moving average. So it's subtle, but it's a hint that the bears might be a little bit stronger here. Bear breakout 23. So bear bar closing near its low, probably going at least a little lower. It is still a trading range, and it could still be 1, 2, 3, maybe a little lower, a wedge bottom, and probably buyers below 19. But judge the buying pressure in the past few bars, or even since up here, the bulls have not done much. It's not very strong for the bears either. There's a lot of overlap. It's a really weak bear channel since bar 12 to 23. But 23 is an impressive bar, and will probably go at least a little bit lower. 24, traders bought the close of 23. It's a double bottom with maybe bar 6 or 19, so we have support at this price. So if we are going to go lower, the bears need to break out below here. What about buying above 24, betting 3 pushes down and then another 2 legs down? There's obviously support. The market's bouncing here. The only problem I have, 24 is completely below the moving average, and there's a tail above, and so that's not ideal. That will reduce the number of traders buying above. Some traders might buy above 24 and give the market a chance, give it maybe 30 seconds, and if it doesn't rally really quickly, if it hesitates and really pauses for any reason and reverses, they'll just bail out of the trade because it's a low probability trade. Small risk, you're going for the top of the range, big reward. You have to have low probability. And 23 was strong enough that bulls who bought below 22 were disappointed. They might use 24 to exit, which there was selling into the close. And so now we might get a second leg down. And then 25, a bear bar, a second leg down, or a third leg down, depending on how you look at it, 21, 23, 25. And it's a nested second leg where the first leg was also a wedge. So there's buying pressure, lots of overlap in here. Really hard to be holding short. It's not clearly always in short. It's not clearly always in long either. But if you look at the bars since bar 12 to 25, the bears have controlled more bars. 25 is a weak stop order trade, so as far as buying above, I would not. There's probably more sellers above 25. 26 tested near the high of 25 but did not go above, but there were sellers. So bulls, maybe if they bought the close of 24, front running the breakout, they got trapped. And then 26 tested the close of 24 and then turned back down. A bear bar closing on its low, but a small body. And still, two legs down, both legs comprised of wedge bottoms. So not ideal to be short. The bears did get a close below this line, the support, but they're still within bar 25. So there's still not a breakout below 25, still within the range of the trading range. And then 27 finally broke out, closing below a lot of bars to the left. That's good for the bears. But there's still a lot of overlap. The past few bars overlapping a good majority of each bar. 27 not a particularly big bar and big tail, so almost more of a trading range bar. But it's a micro channel since bar 22. The odds are there's sellers above the first pullback. 28, the micro channel is continuing, probably sellers above. You can see we tested that support line and then turned back down. So the support, it's subtle, but the support may be becoming resistance. And then take a look at the triangle one more time. You can see we're getting far from the apex. Maybe this is the apex. Somewhere around here, we got the bear breakout, pullback, now getting a second leg. And this is tight enough, it'll probably get a pullback and then a second leg down as well. Bulls are arguing 3 pushes down, 1, 2, 3, and that's true. And each leg here comprised of 3 pushes, so micro wedges, different ways to draw it. But where's the bull signal bar? The bulls need more buying pressure, so many traders are not going to buy above 28. Bull bar 29, but it's the first pullback in the micro channel, so like I said, probably sellers above. And 29 closed around its midpoint, so less bulls will buy above it, and it's completely below the moving average. The bulls want a bar closing near its high, and they want a second entry buy setup. So here's the first entry, then they want a pullback, and then a second entry with a signal bar closing near its high. And then 30, we traded below bar 29, which was a low 1 and a bull bar, so the odds were there were buyers below. But if you did buy below 29 and 30 is your entry bar, it's not great. It closed at your entry price. The ideal entry bar would be something more like bar 19, but instead it's a bear trend bar. Tight channel and a micro channel, leg 1, pullback, probably going to get a second leg down. Every time we touched this support line, which was support, since here, we found sellers. Sellers tried to get above, sellers. Here, touched it, really small, but a test, and then fell. So probably going at least a little bit lower. We had that triangle, breakout mode open, and at this point, market's falling. It's not very strong, but it is a bear channel, and traders are wondering, will we reach this measured move target? 31 is the second reversal setup for the bulls. So nested wedges, 3 pushes down, and a bull bar closing on its high. But look at all the overlap. You can buy above 31, but you need an entry bar like I don't know, the ideal entry bar realistically is bar 77 yesterday. But you want a bull bar like 60 and then another bar 61. You want bears who sell above 31 betting against it to get trapped and have to exit their shorts and provide fuel for the buying to the upside. But the market clearly in a trading range and 5 bars totally sideways. So buying here in the middle of a tight trading range, never ideal. And the tight trading range is completely below the moving average. This red line has become resistance. So especially if we can't get above that red line, probably not going very far. So some bulls will take the trade knowing it's low probability, giving it a chance, and exiting on any sign of disappointment and hesitation. Bears will bet against it. They bet it's a bear channel and they'll sell above any bar and take profits below bars. So we triggered the buy above 31 on 32 and got a weak entry bar. It's a trading range bar. Probably sellers above, and there probably are buyers below. But then 33, if you did buy below, that's a disappointing entry bar. You want a bull reversal bar as your entry bar, and instead it's a bear bar closing on its low. So probably going at least a little bit lower. If a bull did buy above 31, stop below 31, it's obvious that stop is very likely going to get wrong, and we could easily fall for a measured move of the signal bar. And 34, that's exactly what happened. 34, a bear breakout of a channel. Now I usually say bear breakouts or breakouts of channels in either direction have about a 25% chance of succeeding. But this channel is so sideways, it's almost a trading range. And so I don't think it's a scenario where it's a 25% breakout. I think it's more like 50-50. But consecutive bear bars, and then when a far distance down, even though we pulled back, the odds are there are sellers above 34, and the market will get a second leg down. We're testing maybe the open of 77, the bottom of the buy climax, but we're probably going lower. And as far as whether we've seen the high or the low of the day, right now it's more likely we've seen the high of the day. But if we start getting bull bars in a rally, maybe it'll be a reversal day. And the odds that we've seen the high of the day maybe go from 70% to 50 or 40. But for now, probably 70% chance we've seen the high of the day. And again, probably sellers above 34. Inside bar 35. It's a pullback and the market is contracting. Inside bars are triangles on smaller time frames. Bear breakout, the bears are hoping it's a pullback and a bear flag, and then we get a second leg down. The bulls are hoping it's a final flag and it's an inside bar, tight trading range, maybe one more breakout before a reversal up. I keep the channel line drawn here to see how the market reacts to it. Will the bears sell above the inside bar and find sellers at that price, which was support? We were bouncing on it, but then we broke below it. Will it become resistance? Outside bar 36. And so bears sold the high of 35, and we broke out below 35 and found buyers as well. So more sideways, but no bull bar since 32. The odds are we'll get a second leg down. It's a micro channel since 32. The first pullback will probably lead to sellers. 37, another bear breakout, maybe leg 1, pullback, leg 2, but it's all one leg. No pullbacks since 32. Probably going at least a little lower. 38, a doji, so probably profit taking from the bears. And as far as buying above 38, I would not, because it's a micro channel. Your signal bar is weak. We haven't had a bull bar since 32, and that bull bar was a doji. And 31 was basically a doji as well. Just look at the amount of bull bars compared to bear bars since bar 12. The bears are controlling time. The price is going down. It's subtle. There's a lot of overlap, but the bears are also controlling many more bars. It's also becoming a little parabolic here. It was pretty steady, and now we're breaking out further to the downside. Always different ways to draw it. Maybe 1, 2, 3, and we're getting a breakout of a channel, which is a low probability event. Because this one is steeper, this one is the lower probability breakout, so probably limited downside, but you can see where we are. Here's the measured move of the opening range. Looks like 38 tested it to the tick. 39 an inside bar lowers the probability for breakouts, but I would not buy below because it's a tight bear channel, a micro channel, but probably sellers above. Finally, a bull bar on 40, but it's probably profit taking. There have also been almost 20 bars below the moving average, so there might be a 20 gap bar sell setup today, where the bears control 20 bars below the moving average. Once we get back there, they've been paying below the average price for so many bars. Traders will probably be happy to pay the average price once we get there. But here, probably sellers above and limited upside and a second leg down. But 40 is a low one short with a bull bar far below the moving average, probably buyers below. 41, another inside bar, tight trading range over the past 4 bars and possible 3 or 4 legs down. And again, becoming parabolic, falling far and fast from the moving average. The bulls are seeing a double bottom. This was a strong bull bar and rally, and then maybe it's a big pullback, and then the bulls are hoping to get a second leg. But so far they don't have enough buying pressure. But below bar 41, probably more buyers. It's a low one short and 2 consecutive bull bars. 42 bear breakout attempt, but still within the tight trading range. There were buyers below, and there's probably more buyers below 42. Buying above 42 is a second reversal buy setup, but it's a weak signal bar, so that will reduce the number of traders buying above 42. And then a bull surprise 43. So second entry above 39, pullback, and then above 42. Bull trend bar, but right below the moving average. I said there'd probably be sellers at the moving average because it's been about 20 bars below, but when the momentum is that strong, the bears might wait for more selling pressure before they sell. But instead they sold the close of 43, so big bull bar, but then immediately sold. Tight trading range, gaps will probably close, so bull breakout. Here are breakout points, and then we immediately close them on 44. 44 bear bar, but you can call it a low 2, 41 low 1, and then 44 low 2. But lots of sideways price action. This could be a trading range with over here, so it's a low 2 short, low, and a trading range. Plus there's a tail below the bar, so buying into the close, and a strong bull bar 43, strong enough. Even if it gets a deep pullback, it'll probably get a second leg. And then 45, a bull bar, breaking out above 44, but failing, finding sellers into the close. The moving average is resistance, but as far as selling above 45, some traders will. It's 3 pushes up, 1, 2, 3, but there might be more room to the upside. This is a big enough bar that the second leg may have to go a little higher. And at this point, since bar 40, the bulls have controlled more bars than the bears. And it's possible that the market is in a trading range, a final flag before a reversal up. When you think about it, you think about the price action today. Is this bear channel going to last all day? I don't know. When you look at the bear channel, there's a lot of overlapping bars, a lot of tails, a lot of weak bars, small bodies. It looks more like a leg in a trading range. And for the bulls who are buying below, if a bull bought below bar 6 here, they made money. If a bull bought below bar 19, they had a chance to make money. The first place a bull really got trapped was here, below bar 31. And even if they did buy here, scale them lower, they're at least break even. And if we go higher, the gap will close and they will have made money. 46, another bull bar, might be leg 1, pull back leg 2, but hard to sell consecutive bull bars. Bears might argue 3 pushes, wedge bear flag, and that's reasonable, but the bears need more selling pressure. There's been one decent bear bar in maybe 6 or 7 bars, so that's not ideal, and they really want a strong signal bar on 47. Instead, we got another bull bar. Now, 3 consecutive bull bars, bull breakout, and bears who sold above 44, they're getting trapped. The problem here for the bulls, this is still a minor reversal. I don't suspect it'd be really unusual if we went from basically a bear trend immediately into a bull trend. What usually happens, what's more likely, is the major trend reversal setup where you have a trend, in this case a bear trend, and then a strong trend line break, and then a retest of the lows before an attempt at a major reversal. The bulls are getting a major breakout of a decent breakout of a major trend line, getting a good number of bull bars and going a far distance above the trend line. Any bear who sold down here, or really anywhere, if they sold all the way back here, they're suddenly at break even. Bulls who bought below, they made a profit. And that's a problem for a bear trend. That's not characteristic of a strong bear trend or a small pullback bear trend. But still, this is a minor reversal. So now we might have 1, 2, 3 legs up. So we might be high in the minor reversal. Most traders are expecting a retest of the extremes of the trend before any major reversal. And then one more thing. On some higher time frame, this is all one breakout. And so another important price might be the midpoint of this entire breakout. By the way, pretty interesting, the fact that the opening range measure move here, that's exactly where we reversed. So obviously an important price, profit taking there. But again, the midpoint, this line, might end up being resistance in this case. So I'll draw that and put 50% pullback. Three consecutive bull bars, so reduces the number of traders selling above. Probably have to go more sideways before traders sell. 48 at doji, so might be the start of sideways. Disappointing for the bulls if they bought the close of 47. It's not clearly always in long. The context isn't great. More likely converting into a trading range, like I said. Maybe get a retest of the lows. Here is the low of the bear trend. So as far as selling below 48, most traders won't. It's the first reversal down. It's a weak signal bar, but probably sellers above. Inside bar 49, high 1. But again, the context is bad. It's more likely bear leg in a trading range, bull leg in a trading range. So we might be getting high in the range. This is where bulls bought below and got trapped. So there's probably more bulls disappointed at this area, looking to exit their losing positions and look to buy lower. Another bull bar, so we're getting vacuumed up a little higher, and you can see where this bar closed, right at the 50% pullback. Micro channel since all the way down here, 42, so probably buyers below the first reversal, and 49 or bar 50, it's a bull bar, so a weak sell signal bar. So for a couple of reasons, probably not going straight down, probably more buyers below and a second leg up. And then 51, finally a pullback. 51 traded below 50 and we found buyers below. But now 51 is a high 1 signal bar with a bear body, and at that 50% pullback level, probably sellers in this area, sellers above 51. And then instead, 52, traders sold the close of 51. So we're getting a bear trend bar. The bulls, they see it as one whole consecutive breakout and then a pullback and maybe a second leg. But because of the way major trend reversals operate, This was enough down. The odds were there are sellers above, and they may be coming in here at 50%. And the bulls know that, and they may step aside. Bulls may have bought here for a scalp, and this might have been the scalp. And they're not holding for a swing because it's unlikely the market goes. V-bottoms are rare. That's the point I'm getting at. So to convert from a bear trend straight into a bull trend is rare. More likely, bear trend, we get a trend line break, a retest of the trend's extreme, and then we see if we can get a major trend reversal. 53, a bull trend bar, a strong looking bar. But if you're a bull and you bought the close of 50, which is reasonable, it's a tight bull channel, strong enough breakout, the odds are you can buy more lower and at least break even. But then you got disappointed, 51, 52. You scale in lower, maybe buy at the moving average, and then 53 gives you a chance to exit at your original entry. You'll probably take it, and the bulls did take it. So 54, second reversal, strong signal bar at the 50% pullback, and we're expecting a retest of the trend's extreme. I would certainly get out of longs below 54, and 54 is a reasonable stop order trade for the bears. And then a strong entry bar. 55, so bear bar, 54, bear breakout 55, closing well below the moving average, strong pair of consecutive bear bars, probably going at least a little lower. We might go for a measured move of these bear bars. And then 56, we went for the measured move and a little further. The problem here for the bears, it's good that the bars are getting bigger in size, but it's also really climactic. And now we have the open is kind of foreshadowing. It's a triangle, big up, big down, big up. Now we have big down, big up, big down. This looks more like either a broad bear channel or a trading range, and not a strong bear trend. And then you take 54 through 56 into consideration with the context. Maybe it's 1, pullback, 2, pullback, 3 pushes down. What the bulls are hoping for is what I've been saying about the major trend reversal. We have a bear trend, trend line break, lower low, major trend reversal. The bulls hoping that the bulls come in here and buy the close of 56 because it's a weak, or because it's a parabolic bear breakout. And then you look to the left, consider to the left, more likely the market's converting into a trading range and not a bear trend. This is strong enough, it'll probably get a second leg. But again, the context is not great. And then 57 is your follow through. By the way, there's no breakout until there's a breakout. So what I mean by that, 55 is a breakout bar. Every trend bar is a breakout bar. Even 54 is a breakout bar, but it only broke out from maybe the close of bar 53. And then 55 broke out below a couple bars to the left, maybe 7 bars to the left, and the moving average, and that's good. But then 56 breaking out, so it's a breakout bar. But if you measure this leg, you know that only this amount is below the low of the day. Only this amount here broke out. All of this is still overlapping all the bars to the left within the trading range. And we know that 80% of breakouts of trading ranges fail. So at this point, we have a bear breakout, and the bears still need follow through, and they don't get it 57. And that might be enough for bears to exit the trade and for bulls to buy, betting on a major trend reversal, lower low major trend reversal, bear trend, trend line break, lower low, maybe a major trend reversal. One more thing about here, market was possibly in an expanding triangle. I guess it depends on how you draw it, but we might be testing the low of that expanding triangle and possibly reverse back up. Another bull bar, 58. So the bears, really disappointed if they sold a close of 56. And the problem with being short is that this might be an overall trading range day, and you might be selling really low. 57, 58, strong enough for a second leg up. and the bulls still hoping it's a lower low major trend reversal. So bulls are buying, hoping for a swing up. The bears, they might sell, but it's enough momentum. Again, this should get a second leg up before the bears get a second leg, if they do get one. 59 a doji and a weak signal bar for the bears to sell, probably more buyers below. 60 inside bar, so the range is contracting. It's a triangle, but probably buyers below and sellers above. Outside bar, 61. No surprise after an inside bar, but 61 forcing you to buy right below the moving average. But it is 5 consecutive bull bars. That's a problem for the bears. Finally, a bear bar, 62. It's a low 2 short, low 160, low 2, 62, but not enough selling pressure. And is this a low 2 in a bear trend? No. It's the middle of a trading range, so probably buyers below. 63 breakout to the upside, but within this sell-off, the odds are there are sellers at the top of the sell-off. If you're a bull and you bought below 54 or 53, it's a strong bull bar. It was reasonable to buy below, and you got trapped on 55, 56. If you scaled in lower, market came back to your entry price, but you're probably disappointed. So that contributes to the selling on 63. Probably buyers below 63. It's a bad low 2. 64 bull breakout, but closing just above 63, maybe at the high of 63. Not very strong. Again, still within this range. Big down, big up. Probably more sideways here. Bull breakout 65. Looks strong, but it's similar to this big down. Now we're breaking out above a big bear leg, where there's probably more sellers above. And then disappointment, 66. So it's similar to 56. We had the bear breakout, but it's just one bar below support. We need follow through. They don't get it. Bull bar above resistance. They need follow through. They don't get it. Disappointing follow through. Probably a trading range. What about selling 66? I would not. It's obviously too tight. And 66 is a small signal bar. Probably buyers below in a second leg. But the pullbacks can be deep. 67, high 1, but in a bad location, high 1, high in a trading range, probably sellers above. 68, a bull trend bar, breaking out above support, above resistance, but the bulls still need follow through. Market might be racing up to resistance like yesterday's high. That was an important price on the open. We may be coming back there. And then outside down 69, high 1, sellers above, and then they came in 69, big bear bar, but it's a trading range. We're down, we're up, we're down, we're up, we're down. Probably more buyers below. 66 is a strong bar, but it's completely above the moving average, and after a tight bull channel. Disappointing bar for the bears on 70. It's a bull bar. Strong enough it might get a second leg, but it's already a second leg. But the reality is, if a bear sells a pullback, he'll probably get some sort of second leg. And then 71 could be that second leg, failing to break out below the moving average, obviously going more sideways. And getting late in the day, probably going to go more sideways here. 72, a big bull bar, but not breaking out of much. Breaking out of the past 2 bars, they're selling into the close. The bulls need to do more. And then they don't do more. We have an inside bar, 73. Inside bars lowers the probability for breakouts. Sellers above, buyers below. And then a doji, 74. Market unable to break below the moving average. And now we might have 1, 2, 3 legs down. Bulls looking to buy here. Strong enough rally, will probably get a second leg. But it is high in a trading range, so not ideal to be looking to buy either. 75 going a little lower. The bulls hoping it's a double bottom with 71, but 3 bars without a bull bar, not ideal, and 75 is not a strong buy signal bar. And then we get a big bull bar, 76. It's so common to see that in trading ranges where bad signal bars lead to decent swings. Not that this is a decent swing, but it reminded me of it, like over here, 42. weak buy signal bar, and then we get a swing. 75, 76, another big bull bar, but very similar to 72. And what's happening at this price? It's obviously resistance. So as far as being long or short, probably rather be short up here because it's a trading range. Buy low, sell high. Sideways on 77, bulls hoping for the breakout. They don't get it. They might be disappointed with 77 and look to get out of the trade. The bulls are keeping the market above the moving average, and that's good, but the reality is it's mostly sideways, probably sellers above. 78, another breakout attempt, but not closing above the bars to the left, closing at them, and that could be stronger. Now we have two legs up, 76, pause, 78. Two legs up, maybe even three. 1, 2, 3, high in a trading range, probably sellers above. 79, big bear bar. Traders sell the close of 78. It's high in a trading range, but traders are scalping. It's a really tight trading range. We go below bars, they buy. We go above bars, they sell. Any bear bar, they buy. Any bull bar, they sell. So I'm expecting traders to buy a bar like 79, but so late in the day, probably not worth doing much of anything. The bulls also made the bar close above the moving average, so that will increase the chances bulls buy. Bull bar 80, but smaller bar, probably going more sideways. 81, inside bar, into the close. For always in today, it might have been always in long on bar 3, but a little dangerous because it's the open, and you had a bad buy signal bar 1 that would probably get retested. I don't know if bar 3 was enough of a retest. 3 consecutive bars down on 6, maybe always in short, but at that point, big up, big down. In the context of yesterday, big confusion, trading range price action, not ideal to be trading always in. And then where did it become always in short? I don't know. Once the bears start controlling more and more bars below the moving average, here they're getting a micro channel since 22, all the way down. It's probably always in short here, sellers above, and then okay to be short. Bulls or bears might exit above a bar like 31, a second reversal, but there wasn't enough buying pressure and there wasn't a major trend line break, so it was okay to stay short. But if they did exit, they can sell again below a bar 33, bear bar closing on its low. Where do you get out? Probably above 43. And then for always in long, I don't know if we flipped to always in long on 47. Consecutive bull bars crossing the moving average, but a couple legs up, and trading range, probably more buy low and sell high. The breakout could have been stronger as well. These bars overlap a fair amount. There's no micro gap. 45 high overlaps with the 47 low. So if a bear sold here, they had a chance to exit and avoid a loss. And then here, same thing. 3 big bear bars, but is it always in short? I don't know. It's been a trading range, so probably more buy low, sell high. 57, 58. I think if you are short, you get out above 57. And then as far as always in long in here, again, I'm not really sure because it's a trading range. Whenever it becomes always in long, it looks really clear, like 65. That's exactly when it's time to sell. So that's why I think in terms of buy low, sell high, and then tight trading range, obviously, into the close. So buy low, sell high, and scalp limit order in there. For stop order trades today, some traders might sell below 4, betting it's an opening, reversal, early high of the day, but it's definitely an aggressive trade. Bar 4 did not close on its low. And then bar 10, second reversal up, small signal bar, but some traders will buy above 10, betting we get a continuation day. I thought the context on the daily chart hinted toward more disappointment for the bulls. And so as far as hoping for, I thought today would close below the open. And so that's why I'd be hesitant to be taking stop order buys anywhere up here. But it's clearly really sideways and lots of overlap. And so it's not an ideal environment for stop orders. And so for stop orders, Where do you get short? Once you get a micro channel here, and then you get maybe a low 2, low 1 below 29, low 2 below 32, 33 you finally get a bear bar closing on its low, maybe you sell there. And then where do you get long? I don't know. This is still a minor reversal. It went a fair distance, but if you miss this, it's really okay. Maybe you buy above 2 or 3 consecutive bull bars, but not ideal when you know probably testing resistance. And then you still need you need a retest of the trend's extreme, the trend's low. I thought 54 was a reasonable stop order, second entry short. After a bear trend line break, probably going to get a retest of lower prices. I thought 57 was a reasonable stop order trade. You have bears who sold 56, trapped on 57, and it's probably a trading range. So big up, big down, or low, probably look to buy. You can buy above probably any of these bars, expecting a second leg up, and then there's your second leg. And then obviously into the close, I would not be trading with stop orders. Limit order trade today, it was a limit order day, and so pretty much any bar today you could sell above or buy below. You have a low 1 short, low in a trading range, bar 9. There were probably buyers below. Remember I said bar 15, stop order trade, but middle of a tight trading range, not ideal, so sellers above. 19, so you have the bear break out of the triangle, and then 19, the bull's trying to reverse it. Maybe you don't sell above 19, but when you get 21, that's a bad stop order trade, and any bad stop order trade is a good limit order trade, so sellers above 21. All through here, you could sell above any bar. Tight bear channel, sell above. You get a pullback on 29, you get filled, and then still tight enough down, you'll probably go at least a little lower. 31 looks like a minor reversal, small signal bar, not a lot of buying pressure. There were sellers above. All through here, sellers above, they don't come in until 40. You get filled on 40, you make a scalp. 42, the problem with selling above 42 is that it's a second entry. And the market went sideways for 5 bars. Here at least we were going down, but here it's been sideways. And then we had that breakout to the upside. There were probably sellers above 44, but when 45 was a disappointing entry bar, bears probably bailed out, and then we went higher. Tight enough bull breakout, probably buyers below, so buyers below 50, they could have made a scalp. And then here, high 1 above 52, probably sellers above. Here, bull breakout, probably buyers below, bar 60, you get filled there. And then, of course, into the end of the day, bad high 167, sellers above. Bad low 168, probably buyers below. And then just buyers below every bar, sellers above every bar, scaling and higher, and you would make money. But that is much harder to do than it looks. Please feel free to leave questions in the comments and include timestamps for any questions specific to this video. And I hope everyone has a good rest of their night. Thanks for watching.